Good afternoon, VV Nation. This is Glenn E. Tompkins Jr. Welcome to the live stream on YouTube. Trending Thursday. Glad that you're all here. I'm happy to be here. In the background, I have my super producer, Joey. Joey, say hi.
Hi.
There you go. So we get ready to rock and roll. If you can hear me, if everyone can hear me, please type something in the affirmative to let me know that everything is good to go. As you can see, if you're brand new, everyone can see everyone's type. So Jay, be good. Be good. And actually, not only be good, Rich, be good. And Jennifer is here. Thank you, Jen, for being here, for helping us out as well. So with all of that being said, man, I'm ready to rock and roll. And it did go out. That's interesting. Yeah. All right. Well, Joey and I are just looking at some things in the background. There we go. All right. Looking at some things in the background. So I'm glad that you're all here. We're going to get hot and heavy into this. If you're new to Trending Thursday, what do we do here? Everything we do here, we look at stocks that are making news. We use the power of the VectorVest software to delve down into the stories. And I'm going to let you know if some of these stocks are good to go or not good to go, ready to rock and roll. And I'm going to show you which ones are good long-term plays and which ones are trades. So if you're ready, I'm ready to get started. First thing we do every week, we use the VectorVest software and we get into what's going on in the market. So we always start off with market timing. No matter what, we always start off with market timing. So let's go to the market timing homepage, or from the homepage. If you're new to the software, we can get you a link to the software. Joey will type it in the room. Take a trial, but this is what you see when you first open up the VectorVest software, and it's unlike anything you see anyplace else. That is real and true. That's not me just blowing smoke where it doesn't belong. That is real. We analyze the market better than anybody else out there. So we're starting with what's going on in the market today. We'll look at our quick list. All of the major indices are down today. All right, and that is what it is. Today is not a panic day. Today is just a day where the market is going down. If you're a little bit more aggressive, play the market to the downside. Today is a trade day to the downside. But if you're a little bit longer term, sit on the sidelines, let your market timing keep you in the market. If your market timing is telling you to be long, manage the trades with the stops that you already have. Today is not a panic day. All right, just because the market goes down doesn't mean that you panic. Now, with that being said, the Dow is down about 1.5%, the NASDAQ down about 0.8, the S&P down overall about 1%, and our VectorVest composite is down almost 2% today. For those of you who are new, let me talk to you about what the VectorVest composite is. The VectorVest composite is an indexed arithmetic average of all of the stocks that we track. Currently, we are tracking 8,176 stocks in the database. All right. Now, our one indicator VVC tracks the move of all of those indicators in one ticker symbol. So when we say we time the market, we look at the move of that VectorVest composite on both the day over day and week over week basis. So we feel that it is a better representation of broad market movement. Any stocks that you're asking me to take a look at, do not type them in the room right now. I will not be able to look at it because Joey will take my type away. So he takes the chat away to keep me on point. Don't type in your stocks yet. I will give you an opportunity to put your stocks in, all right? So all of the indicators, all of the indices are down. Let's move over to our color guard, which is our traffic light into the market. A lot of yellow in the color guard right now, which still means be cautious. All right, but there's a lot of green in the price column. Remember, the price column looks at that VectorVest composite. And when you see a green light, that means the price of the composite has gone up on both the week over week and day over day basis. Today, the market has gone higher, or the VectorVest composite has moved from 4102 to 4298 on a week over week basis, but it is lower because we have a down day, lower from yesterday at 4381. The data is mixed, so we assign a yellow tile. RT, this is an indicator that looks at the short-term price trend of the market, and it is cast on the scale between 0 and 2. When RT is above the value of 1, like it was yesterday, the market is considered to be in an uptrend. Today, it went back below the value of 1, generating a red light. So the market is back down in a downtrend, but that is just today. All right, promo video yet in the...
That's my team saying it's...
Okay, that's not for me. All right. So with that being said, the buy to sell ratio, which looks at the overall health of the market, when I told you that we analyze the market better than anybody else, we actually have an indicator that looks at the health of the market. The buy to sell ratio, the canary in the mine, it goes under a couple of different names. But this indicator looks at the relationship of buy recommendations divided by sell recommendations. When the BSR is below the value of 1, we clearly have more sell recommendations in the software than buys. The market is showing signs of weakness at this time. All right, with all of that being said, a lot of yellow in the color guard, let's move over to our market timing graph. I'm going to pull up the market timing graph for you, and then I'm going to pull up the market timing graph for me. Remember I talked to you about the VVC? Well, this is that indicator right here. We're looking at the move of over 8,100 stocks in one ticker symbol, and when it moves, we can definitely say that the market is moving. When it moves down, we can clearly say that the market is moving down, and if you are a VectorVest subscriber, we got our customers out of the market closer to the top. If you don't believe me, take a trial. Take a trial and read the nightly newsletters called The Views that we talked about during this time period. I ain't just making it up, and we have a footprint in the sand that backs up what I'm saying. We can't fix that and say, go back in time and say, oh, let's do that. What you see in The Views, our nightly newsletter, is what's there. So if you don't believe me when I said that, go look at the written data that we have in the software. Currently, coming off the March 23rd low, the market is coming off of that low, rising higher, pulled back a couple of times. But remember, when you're looking at the movement of 8,100 stocks, we can clearly see that the market is trending higher. If I draw a freehand line from the low, there's the market moving higher. I like that. Today is a down day, but are we still trending higher with this trend line? The answer to that is yes, we are. Looking at the MTI, the underlying trend of the market, we had moved up above 1. We moved up above 1 again. All I'm telling you is right now the underlying trend of the market is back down. Look at that buy to sell ratio on the graph. Not above the value of 1, so the health of the market is still showing signs of weakness. Prior to the pandemic, though, we were showing signs of strength back here. The underlying trend in the market was above the value of 1 back here, so it was up. Let's go down to the last indicator, the RT. Lets us know when the market's in an uptrend. And right now, we did peak above that value of 1 and pulled back today. But overall, don't get sullen. Don't get somber. Don't get melancholy. The market is still in an uptrend coming off of this low. So with that being said, let's talk about why we are the way we are. I'm going to close out of the market timing graph, and let's go to our first news article. Because we always start off with the market, let's go see what market things are moving the market. The Fed, to keep the rates steady until economy has weathered the COVID-19 storm. The Fed is doing everything that it can to keep us afloat, to keep us as strong as an economy as we can. COVID-19 has affected the economy adversely. The Fed is doing everything. They're buying bonds. They are putting money. They're doing everything that they can, lowering the rates, everything that they can to keep us afloat. Now, even with that being said, even though the COVID-19 has affected us adversely, we still have one of the strongest, if not the strongest economy in the world. And that helps us. That helps us, or it could hurt us. Because if the dollar is strong, it costs more money to buy our products. When the dollar is weak, more people are going to buy our products. But that's going to also tie in with gold, which is one of my stories today. So even though we're still one of the strongest economies, I'm still waiting for the dollar to really get deflation, to get deflated. It's not quite there yet, but as we get more into the earnings season, dropping the economy some more, which is going to happen. There's no ifs, ands, or buts about it. It's going to happen. That's going to start to be stimulus for breaking down the dollar and increasing gold, making gold move higher. So the Fed is going to keep the interest rates. I thought for a second that they were going to put us in the negative rates, but they didn't. We're still sitting at 0 to a quarter basis point. So they didn't lower it, but they are not going to raise it anytime soon. The Fed to extend loans to more cities, counties. So with all of this, cities, have you noticed that a lot of cities and states are on the precipice of declaring bankruptcy? Man, that's huge too. So the Fed is going to extend more loans to individual cities and counties. Central bank widens eligibility for new local government lending program, allowing more than 200 municipalities to participate. So I don't know where this is. This sort of looks like Brooklyn. It does look like Brooklyn. Hold on, where's that at? The majority of the Americas, they didn't say what that is, but that looks like Brooklyn. Hey, Jay, that look like your neighborhood? This might be my old neighborhood. This looks like it. Is Jay answering? That might be your old neighborhood, Jay. That definitely does look like New York. All right. In the last story I have on the market, Mnuchin says big companies should apologize for taking small business loans. I made a comment not too long ago on Trending Thursday, like companies like Ruth's Crisp took money. They didn't need to. But other companies like Shake Shack was given the money and they gave it back. But I like that somebody's stepping up and saying that, some of these big companies who were issued or extended these loans, they shouldn't have taken it. A lot of these mom and pop companies out there are struggling. And companies like, I'm putting it out there. Ruth's Chris, it was in the news. So it's not like I'm targeting them. They were in the news. They took the money. But I'm also going to tell the other side of the story where Shake Shack gave it back. You got that, Joey? Mm-hmm. Shake Shack. Make a song out of that. Shake Shack. Yeah, Shake Shack. Give it back. Hey! Anyway, so it's just interesting how somebody somebody way up in the hierarchy is saying that some of these companies should apologize for taking the small business loans. All right, so these are the things that are shaping the market right now. I always try to look at things dealing with earnings, interest, and inflation. All right, inflation is not an issue just still quite yet. Interest rates are still being kept low. Companies are still making money for the most part. We're going to talk about some big companies that either hit or miss earnings. So let's go look at the market again in the software. Let's go back to the VectorVest software. Did I close it? Did I close that graph, Joey? Man, I think I did. Wow. No, you didn't. Huh? Yeah, you did. I did? Well, let's do it. Let's just do it this way. All right. Actually, no, let's go back to the viewers. I have the two indicators that I use in my watch list. I have the two indicators I use in my watch list. I use the SPY for those of you who are not VectorVest subscribers. And then for those of you who are, I use the VectorVest composite. So whether you're a subscriber or not, we can still keep on top of what's going on in the market. I'm not going to analyze them with our indicators. What I will do, though, is look at them on a graph. I'm going to right-click, view the stock graph. From here, here's the VectorVest composite. Remember, this is the movement of over 8,100 stocks. I have a 20-day exponential moving average, which is a good middle-of-the-road moving average, especially if you're looking to swing trade. I like that the composite went above the 20-day moving average. In this case, the spiders went above the 20-day moving average. What is it doing now? A little bit of sideways mumbo. Let's take off the last close. A little bit of sideways mumbo. What do? Right now, the market's just, as it was moving higher, it pulled back a little bit. That makes sense. That makes sense. What goes up must come down. And it was moving up nicely. A down day the day before yesterday, an up day today, a down day today, but not drastically falling. That 20-day exponential moving average still says it's okay. Don't panic. This is don't panic mode. Next, we have the RT, the short-term price trend of the spiders, still above the value of 1, so the spiders overall are in an uptrend. Watch volume, though. Let's bring up the VectorVest composite, nicely above the 20-day exponential moving average. Notice that as the market or the VectorVest composite pulled back, where did it pull back to? Right to that exponential moving average, bounced off again. Today is just a down day. So I really don't want any of you to really panic and start looking up and say the sky is falling, because it ain't. Today is just a down day. Today is a day that you allow your stops to manage the trades that you have. That's it. And if a stock gets stopped out today, today is not a day to replace a stock. Hopefully everybody in the room understands that. So those are my stories about the market. These are the two indicators that I look to back up what's going on in the market. And right now, the market, from the VectorVest composite to the spiders, are in an uptrend. Today is just a down day. Any questions, Joey?
What's the difference between 10 moving average, 20, and 40?
What's the difference between a 10 moving average, a 20, and a 40? The time frame. The smaller the number, the more responsive it is. I can take this same moving average, drop it down to a 10. Look how closer it tracks price. All right, the lower the number, the closer it tracks price. The higher the number, it doesn't track it nearly as closely. And if I change that from a 20 to 40, you will see that price and that moving average won't be nearly as responsive to each other. All right, any other questions, Joey? No? All right, let me close out of the graph and let's get into our next story. The next story, interesting. How many of you have been watching the Trending Thursday for a minute? I just type a yes in the room. Joey will let me know when you start typing that in. If you've been watching the Trending Thursday for a minute, they are responding? Yeah. Nobody's responding? Is anybody listening?
Nobody's here.
Nobody's here? All right, so nobody's listening to me. Anyway, if you notice, there they are, now a bunch of yeses. If you notice, we've been looking at something called the coronavirus watch list, right? Look at this. The market, no, hold on, not that one. Is that the one I want? Coronavirus, did I get rid of it? Oh man, there it is. S&P and CNBC COVID-19 Testing and Treatment Index. There it is. The S&P, there it is. The CNBC has come up with a COVID-19 index. I wonder where they get that idea from. I'm very interested on where they got that idea from. And they've got a watch list of companies in this COVID-19. They've got 29 companies. 29 companies that are working on testing and treating of the novel coronavirus. Its components are a mixture of pharmaceuticals and biotechnology companies ranging from Cambridge, Massachusetts-based Biogen in Foster City, California, Gilead. Interesting, right? So we've had our watch list out for the longest time. I'm just bringing it to light that CNBC has now got an index that tracks the stock performance of companies working on a coronavirus cure. That's all I got to say about that, right, Joey? That's all I got to say about that. So, moving on, a big coronavirus stock making the news is Gilead. Gilead says early results of coronavirus drug trials show improvement with shorter remdesivir treatment. Gilead said preliminary results of the coronavirus drug trials show at least 50% of patients treated with a 5-day dosage of remdesivir improved. All right, so that was really a big mover in that watch list of stocks, of which I'm going to show you our watch list that tracks more stocks than theirs. All right, let me get back into the software. I just really wanted to bring that to the forefront because I was like, really? Here's Gilead. Let's analyze it. The stock is currently over its value. Every stock in our database gets a value, what we feel a stock is currently worth. Our mantra is to have you in safe, undervalued stocks that are rising in price in a rising market. Just because a stock is overvalued doesn't make it a bad stock. It just means that people are willing to pay a premium to own the stock. That's all that means. Now, remember when I still told you that we analyze the market and stocks better than anybody? Let's look at the next 5 indicators here. Relative value, relative safety, relative timing, VST, and CI. If you'd like, I've done short videos on how all of these indicators work here on YouTube. You can find them. Relative value looks at a stock's long-term price appreciation potential, and we compare it to an alternative investment in a AAA corporate bond. You buy a bond, after it matures, you get your money back with a little interest. Well, relative value is going to show me long-term price appreciation potential. Should this company outperform that AAA corporate bond over the next 1 to 3 years? Right now, all of these indicators, all 5 of them, are cast on a scale between 0 and 2, where above 1 is favorable and below 1 is unfavorable. Gilead Sciences, relative value below 1, unfavorable. This stock long-term is not something I want to hold, but this is more of a trading stock, and I'll explain that in a second. Relative safety, RS, looks at a stock's consistency and predictability of financial performance. Earnings is the engine that drives the stock's price higher. Relative safety is an indicator of risk, and it looks at the stock's ability to meet or exceed its earnings expectation quarter over quarter and year over year. The higher the relative safety above 1, the more probable the stock will meet or exceed its earnings expectations. Well, it's at above 1, so Gilead stands a good chance that when earnings comes out, it's going to meet earnings. Relative timing. looks at the short-term price trend of the stock. Is the stock in an uptrend or not? RT above 1, stock's in an uptrend. On a scale between 0 and 2, the higher above 1 it is, the faster in an uptrend it is. So looking back at relative value, the stock doesn't have good long-term price appreciation potential, but it is moving now. This is more of a trade. Hopefully everybody in the room can now learn to analyze any stock in the database to determine whether or not it's a longer-term play or a shorter-term trade. Gilead is more of a shorter-term trade. But wait, there's more. We look at the earnings. The company has positive earnings, but they are growing their earnings at a negative rate, -5% a year. It does have a buy recommendation in CI, which is Comfort Index, looks at a stock's ability to withstand long and lengthy price declines. CI is above 1. The stock is more resilient when it goes down. It tends to go right back up really quickly. And again, our master indicator, VST, which looks at relative value, relative safety, and relative timing, has a VST above 1. The stock overall is a good stock. The higher above 1 the VST is, the stronger the stock is with the combination of value, safety, and timing. Let's look at its graph. Let's view the stock graph as we pull that up. Gilead. And now, overall in an uptrend, but look at this. Remember I told you that this was not a longer term trade, that this is more of a trade? Now you see why. Look at the volatility on the stock. On the up days, it does good. On the down days, it does bad. Overall, though, with the 20-day exponential moving average, Gilead is trading above its moving average, that 20-day exponential moving average. RT is still above 1. Gilead is still in an uptrend. If I am trying to hold this stock long term, now knowing that the RV is below 1, I hope this makes sense. Do you want to hold that stock long term with all of this up and downosity? That's a Glenism. With all of this up and downosity, do you really want to hold on to this stock? Relative value is a smart indicator. All right, but wait, there still is a little bit more. Let's go to our watch list that we created way back in February when I was doing a presentation in the Savannah user group. I first brought this coronavirus stock watch list out. Theirs tracks 26. Mine currently tracks 39 stocks. Now, if I want to use this as an index, well, before I go and say I want to use it like an index, let's start off. One of the things that Tom does in here, he will open up this watch list every day and sort by percent price change. What does that do? It shows me which stocks are moving today, and a lot of people have made a lot of money trading those stocks on those days. Now, from an index standpoint, let me go down to the watch list average, which is looking at all 39 stocks in one graph that I'm going to pull up. View the watch list average graph. As I open that up, this is what my 39 stocks are doing. So right now, what is it doing? Pulling back a little bit, but still above the 20-day exponential moving average. How cool is that? Now, I never called this an index, nor will I. Just interesting that CNBC is already doing something that we've done already, and they're now calling it an index. I'm calling that. I own that here at VectorVest. Not me personally, but we own that. We've been doing this prior to anybody else doing that, and that's one of the benefits of being here on Trending Thursday, folks. So yeah, it's pulling back as a group of 39 stocks, still above the 20-day exponential moving average. But as I close this out, I'm never afraid to open up this watch list, sort by percent price change. This is a great way from a trading perspective to take advantage of which ones of these stocks are moving at any given time. Gilead is somewhere down in here. It's down today, but if I analyze it, the stock, and we already analyzed it. The big mover today right now is Trinity Bio. The stock is currently a little bit overvalued, no good upside potential, no good safety, RT above 1. This is a trade. Many of these stocks that have RTs above 1 telling you they're in an uptrend, many of these stocks do not have fundamentals except for here. How about Regen? Now, if I'm looking for a biomed to hold long term, Regen might be it. The stock is undervalued, good upside potential, good safety, and moving higher, and a buy recommendation, growing their earnings at 17% a year. That's more of a long-term play. And this is how you can analyze any stock in VectorVest like this and be able to make a true determination before you pull the trigger on the trade, whether it's a longer term hold or shorter term trade. Joey, any questions? OMG, Joey.
No questions.
No questions. Are you just saying that because, also, are you mad at me now? You not mad at me? You sure? Because I got some fruit. You want some fruit? I got some fruit. Okay. I was trying to give Joey some of my fruit. He didn't want to. I'm trying to make him happy. I'm going to give him some fruit. No fruit? All right. So there's my stories on the coronavirus. I really thought that it was particularly interesting that CNBC has come up with an index of something that we've been showing our subscribers here on YouTube. All right. Go to the next story. Next story is oil. Now, I've been getting people hounding me about oil. Is it the right time to buy oil? What have I been saying? The demand for oil is not there yet. We still have an oversupply. But the amount of oil that we have sitting in supply has dropped a little bit. Now, what makes oil go up? Demand. If we still have a bit more oversupply, the demand is not there. But other countries like the Saudis and the Russians, a lot of other countries, oil-producing countries are starting to cut back on production. That, at some point, is going to stop the oversupply going out all over to even include us, and oil could be getting ready. Now, the story here says, and this was on April 27th, oil drops 3% in a volatile session as storage capacity fears and weak demand. Folks, that is key. When you hear me talk about not buying oil right now, it is weak demand with oversupply. But wait, I got another story. Oh, I don't have another story. That's the only story that I have. All right. Oil alternated between gains and losses in a volatile trading session that one point saw U.S. crude drop more than 20%. Traders continued to eye dwindling storage. All right, we're running out of places to hold it. Although some of the losses were offset by optimism about reopening of economies. So now there is some good news coming in, which could be a driver of oil prices starting to go up. But wait. Let's do this. Let's get, oh, darn it. Did I do it the wrong way? I did it the wrong way. Dang nabbit. I'm going to do it that way. It worked. All right. Let's go look at, I have two stocks in here for oil. I have, that was my extra stock, USO and WTI. One is an ETF. That's USO. WTI is West Texas Offshore. The stock is currently overvalued. No good upside potential, no good safety. But what do I see going on with WTI? RT above 1. The stock's in an uptrend. It is in an uptrend. Let's go look at the stock graphs real quick. All right. Whew. U.S. oil, something happened. There's the split. There was a 1-to-8 split on USO. I would rather look at WTI. There it is. WTI, West Texas Offshore. Look at that. Above the 20-day. Now, for any of you, let's go back 5 days. 1, 2, 3, 4, 5. This was last week when we were looking at WTI. We did look at it last week. This is where it was. I said I would really like to see the stock break up a little bit more. It did. Finally, take off last close. It did. It started breaking up, but what is it doing right now? Even since last Thursday, what's the stock doing? All right, it's moving sideways. Let's take this a step further. I do have a petroleum watch list. So for those of you who are, I know, is Rich here? Is Trade Shark here? I know that he's already been, he's on my personal tweet and Facebook. He's like, no, I'm ready to go buy oil. Let me show you something. I got a listing of 80 stocks in my oil or petroleum watch list. Now, what I do want to show you, let me show you something. I can do an index of oil stocks this way too. I've got 80 stocks in here which cover the full gambit of petroleum. Exploration, drilling, the whole 9 yards. The thing that needed to be done for all of these stocks to get in here, the stocks had to be greater than $1 and they had to be greater than 100,000 shares average. All right, so with that being done, I've got a listing of 80 stocks. Notice that in my watch list average, the stocks have good upside potential. So Rich, I'm with you. Long term, I think oil is going to work. I'm with you. Good upside potential on the watch list. The safety is not there, and RT is below 1. If I'm thinking about pulling the trigger on oil, the demand is not there yet. Let's wait for the whole group of the stocks to get an RT above 1. Let me graph it for you, Rich. I'm really coming after you, my friend, because I know he says he's ready to get into it. Now, let me show you a couple of things. One, see this gap down that happened on March 6th? You know what we haven't done yet? We haven't faded that gap yet. We haven't filled the gap that happened on March 6th, number one. Number two, the stock or the industry of these stocks, all 80 stocks, is currently above the 20-day exponential moving average. So that's one in your part, 1 point for you there, Rich. Number two, it's trending higher from the low. That's 2 points for you, Rich. Three, RT is trending higher, not above 1, but trending higher. That's 3 points for you, Rich. So if I'm looking at being a little bit more aggressive, could I be in oil right now? The answer to that is yes. If I'm looking for more confirmation on being in oil, let's get back into that gap that happened back on 3-6. Let's wait for RT, which nobody else has in this industry, to tell me that oil, these 80 stocks as a watch list, is back above 1, saying that they're in an uptrend. So, Rich, I got you. I know that you're a little bit more aggressive, but before I tell anybody out there who's waiting to get into oil what to look for, I would definitely like to wait for RT to go above 1. I like volume overall as well, but this is what I'm looking for before I pull the trigger, and that's the power of using the VectorVest software to make a better decision. From a more aggressive standpoint, look at this here. It went above, you're like, yay, oil's gonna go. Oh, it fall down, go boom. Then it rose again, yay, it's time to go. Now it's moving a little higher. I like that as well. But if you need more confirmation, folks, let's get back into the gap that happened here, number one. Number two, let's wait for RT to get above 1. Any questions, Joey?
Can we get that search for oil?
It's not a search. And Joey, all right, I'm going to do this real quick. Take me off the screen. If you want, when this video comes back out, take a screenshot right now. Take a screenshot right now of these first few stocks. This is not a search. This is a watch list, and I used the industries within the VectorVest software. I looked at all of the petroleum industries, and I put all of the stocks from all of the industries into one watch list. I sifted through that watch list to make sure that all of the stocks that I wanted to keep were greater than $1 and had an average volume of greater than 100,000 shares. What Joey is doing, he's trying to make sure that you can screenshot each one of these screens, or better yet, when this does come out, when Joey cuts up the video and it comes out, you can pause, write these down, build your own watch list. But Joey is taking the time to make sure that he's segmenting each one of these pages out so that you can make your watch list. Take screenshots, take screenshots. All right, thank you for doing that, Joey. Any other questions?
Rich said he got 3 points, so.
All right, so good for you, Rich. But I said...
So you're drinking that haterade?
No, I'm not drinking haterade. I'm drinking reality aid. I'd rather, for anybody who's going to listen to me, I want to be real. I want to give you real talk. If you're more aggressive, as I mentioned, jump. All right, I know that Rich is a little bit more aggressive, but not everybody in the room fits that. So what I'm trying to do is give you some semblance of what to look for before, as a group, you pull the trigger. If you're more aggressive, you looked at the graph. The graph says, fine. If you're not that aggressive, I've now at least set the table for what to look for. Anything else?
How many buys are on that list?
How many buys are on this list? If I sort by buys, sold, hold, sells, wow, 4. Rich, you with me still, bro? Only 4 stocks in that whole list of 80 stocks is a buy recommendation. Does that make sense if you're looking for confirmation, folks? Because as we get closer to confirmation, more of these stocks will become buy recommendations. Rich is a little bit more aggressive. What I just did by sorting by recommendation proves it. That's it. I'm only talking real. That's the only way for me to be in this room, is to talk real. All right? Any other questions, Joey?
No love in RT or VST?
Say again?
No love in RT or VST?
And actually, I looked at the whole list on RT and VST. Look at them. Still below. Could I figure out the stocks? How about if I go through the list and I try to find a stock that's got all three above one, RVRS, RT above one? I might have a hard time doing that, right? Look at that. Wow. I've got no stock in this list that's got above one on all three. Another reason why, as an industry or as a group of stocks, I'm not ready to pull the trigger yet. I need more confirmation.
Do you have a trial offer that you can extend for the Jockey Club?
Do I have any trial? If you take a real-time trial, you can get a trial for the Jockey Club. That's the closest way best way I can answer that.
Perfect.
All right, any other questions?
No.
All right, let's get back to our main watch list. I'm loving the questions today. Get back to the main watch list, and let's get to the next story. The next story is talking about gold, another hot topic. Another hot topic in the market is gold. So let's talk about gold. Remember I talked to you about our economy still being the best economy around the globe? Well, that's gonna help the dollar. And until the dollar starts feeling the effect of becoming deflated, gold is still going to be kind of spotty. Gold set to snap a 4-session skid, poised for biggest monthly percentage rise in 10 months. That was done. That story was today. This is a story from today. Total gold investment demand climbed 80% year over year for a 4-year high of 539. So now people, because of what's going on in the market, there used to be a time that when the market went down, gold went up because it was a flight to safety. I think that after 2008, that correlation stopped a lot. It's not nearly as strong as it was prior to 2008. Because there's a lot of times when the market's going up, gold will go down. Or the market is going up and gold will go up. So that direct correlation is not as tight as it used to be. But still, I think a lot of old school investors still feel the same way, that when the market goes down, they run to gold. But this is another story from, like I said, from today, set to snap a 4-session skid. So that was just what the story was all about. Let's get back into my watch list. From the watch list, what do I have for gold? I put in here the Huey. Where's the Huey? I swore I put the Huey in there. What did I put in here? Huey and KGC. What did you do to my list, Joey? Oh, 430. That's the right list. Well, I probably put them into my gold watch list overall. So let's go over to gold stocks. All right, let's go over to the gold stocks. And let's go find the Huey. All right, where's the Huey and KGC? KGC we looked at last week, didn't we? By VST, though, it's still the best stock that I've got in my gold watch list. All right, so KGC, and let's go find the Huey. Where is it? Oh, darn. I hate you, Joey. There it is, Huey. All right, so these are the two that I really want to pay attention to for gold. I'm going to right-click, view the stock graph. Let's go look at these two. Here's KGC. We talked about this last week. Put this on 3-month graph. It's still okay. All right, KGC is still okay. We were looking at that along with JNUG last week. I still like KGC above the 20-day exponential moving average. Just pulling back a little bit, but if you're in KGC, use your stops to manage the trade. RT still above 1, pulling back a little bit, but the stock is still overall in an uptrend. The other one I'm going to look at is the gold bugs. All right, above the 20-day exponential moving average. RT pretty steady, but pulling back a little bit. Broke through a couple of levels of resistance, hit a new high. Candlestick pattern known as a shooting star. No real follow through until a couple of days ago. I still think that gold overall is on the rise. On the rise, but taking a breather right now. Let's go look at my hold watch list of gold stocks. There's than 100,000 shares. Let's sort this by percent price change. What gold stocks are moving today? Only 2. How about NUPM up 1.86% and NMX? So what does that tell you about gold today? Gold today is probably pulling down more so than going up. All right, let's go look at the watch list average of all 49 stocks. We'll right click, view the watch list average. Let's talk about gold. Let's talk about gold, baby. Let's talk about you and me. All right, anyway, let's put this on a 3-month graph. There's gold. There's gold in a nutshell. What's gold doing right now? Taking a little bit of a breather. Clearly above the 20-day exponential moving average, hitting a new high for the last 3 months in the last couple of days. RT rising. Gold is on the rise overall. And I think that as earnings still comes in for this earnings season and next earnings season, gold is going to start moving up even more. If you're not in gold, right now I'm going to tell you, as you look at this group, get prepared. Get prepared. And that whole watch list of stocks is moving up. Taking a little breather right now. Look at the volume, pretty steady. Love the relative timing on all of these stocks. Love the relative timing. And you know something? If you're going to try to find a stock to get into long-term from gold, let me show you how to do that. Sort the whole list by relative value. What gold stocks have good upside potential? Whew! K92 Mining, highest. Now, it's getting hurt right now, but look at this. They grow their earnings at 38% a year. Harmony Gold, HMY, 35% a year. Alexo Resources, 40% a year. These are good companies for the long term. Now, let's flip that a little bit. What stocks are moving up the fastest? We got an indicator for that. Let's sort this by RT. The fastest moving stock in here is Mag Silver. Down today, but the fastest moving stock in this watch list of 49. Folks, I can take this watch list of stocks, turn it, flip it any which way I want to get what I want out of it. I love that these gold stocks are growing their earnings big time. I like that a lot of them are buy recommendations. Today is just a down day in gold, but overall, I can find some good plays within the gold industry looking at this watch list of stocks. Holy smokes, how much easier could it be? Whether I'm a longer-term investor sorting by RV this list, or I want to see what's the hottest ones right now, sort by RT, or if I'm trading today, sort the list by percent price change. I got a lot of different ways that I can manipulate 49 stocks to get to where I want to be. Any questions, Joey?
Why not only look at the HUI RT instead of your watch list RT? What's the difference?
HUI looks at the gold bugs. All right, so the question is why just look at the HUI RT instead of the whole watch list RT? The whole watch list RT is up overall. Huey is something that we track for gold. All right, so I wanted to look at the Huey individually, and it is the gold bugs, very widely used for tracking what gold is doing. So I did it on an individual basis by looking at the Huey, but then I can look at the RT for the whole watch list of stocks. Gold is on the rise, folks. There's no ifs, ands, or buts about it, and I showed you several ways, whether you're a longer-term investor, looking for the hottest ones to get into, or looking for the ones to trade today. 3 different ways to look at these gold stocks and make money. Any other questions?
Where do I get the gold watch list?
The question is, where do you get the gold watch list? A lot of these watch lists that we've created, folks, we've done it. How did I do this? And I'm going to show you this real quick. How I built these watch lists, I went to like the industry watch list, the industry viewer, all right, because I got all my industries here. From the industry viewer, I sorted it alphabetically by sorting on the industry. Once I've done that, I am now going to look for all of the stocks within all of the mining industries. So I've got mining uranium, mining other, and mining gold, silver. I go to these industries, I open up, view the stocks in that industry group. In the mining uranium, I have 18 stocks. I take these 18 stocks, put them into a watch list. I do the same thing for mining other and mining gold, silver. The biggest thing is once I've built that one big watch list of all of the 3 industries, I now sift through, take out all of the stocks that are less than $1, and I take out all of the stocks that have an average volume less than 100,000 shares. Folks, that's how I build any watch list that I show here in this presentation. Hopefully that now clears it up, because every time you ask me that, you don't have it, but I've now explained how I build it. Hopefully that makes sense and clears up. And so nobody else should ask me, well, how do I get that list? How do I get that list? I now showed you how. Go to the industry. Look at all of the industries pertaining to the stocks that you're looking for.
I know we didn't have a story on this, but a lot of people would like to see dust.
All right, so I didn't have a story on it. Let's go to dust. We'll do it real quick. Let's go to the viewers. I'll add it. I'll add it as one of my gold stocks. Let's go to my watch list viewer. I'll put it in for today's, 4:30. All right, I'll add dust to my list. Now, evidently you're looking at it because you say, well, what's dust doing? Well, let's go right-click on dust. Let me find it. Joey lost it. There it is. Let's right-click on it. What did I say? Gold is down today, right? What do you think dust is doing? Dust is going up. Let's view the stock graph. Dust is going up. But look at this. That's that's another split. I'm not feeling that at all. All right, let me put this on a 1 month graph. The bars are so freaking small, but with a down day in gold today, dust should be rising. Now, the only people who should be playing dust are the people who are playing gold on a down day. Does everybody understand that? If I know gold is going up, dust is not a long-term play. Dust is a counter day when the gold is going down. Does everybody in the room understand that? Please answer that question. Because if everybody's asking me to look at dust, maybe some of you are thinking, man, maybe I should jump on dust. Gold is moving up. Dust only moves up when gold's moving down. Are people answering in the room? Yes, do they understand? Oh, Lord. All right, I should put a disclaimer out there. Anyway, you're only going to play dust on the day that the gold is down. Gold overall, though, is moving higher. Still nobody answered?
Jaron says yes.
All right. Only one person? Wow. Did I confuse the hell out of everybody or not? But that's good information to know. If a lot of people are asking me for dust, it's not a long-term play, folks. This is just the play when gold is going down, because if I close this out and go back to that watch list, gold is going up. Dust ain't the play unless you play it on the day that gold is going down. That's the only time you play dust, and it's a trade. It's a trade. So for everybody who's out there asking me for dust, it's a trade, folks. Don't nobody go buy that out long. All right, so there we go. Now I see all of the yeses. All right, now I see all of the yeses. Folks, don't forget to comment, like, and subscribe, especially if you're new. Please don't forget to subscribe to the page. All right, please don't forget to subscribe to the page. Dust is short gold, absolutely. All right.
Worth your weight in gold.
Well, what? Who said that?
Andy.
Andy says, got it. You are worth your weight in. Listen, that's a big old belly right there. That is worth my weight in gold. That's what it is. All right. So with that being said, take that away, Joey. So that's my story on gold, and I'm sticking to it. All right. And I like the idea that you're asking about it, but I want you all to know that that is a trade, folks, especially knowing that gold is going up. That is a trade. All right. Let's go to my next story. How many people realize this is all about travel? Now, this is all about travel. Southwest Airlines posted the first loss since 2011. Why? Ain't nobody flying nowhere. I think they're going, boom, you're free to move about the country. Ain't nobody going about the country. All right, sees revenues down as much as 95% in May. Airlines are getting smoked. But now, airlines did get a bailout. Now, I don't know how much of a bailout the airlines got, but they did. They got a bailout. Southwest expects revenue in May to fall as much as 95. That's huge. That's huge. The airline disclosed plans for a public stock offering and $1 billion in additional debt as bookings dry up. The coronavirus and stay-at-home orders have hit the airline industry especially hard. Well, that's only one. How about American Airlines? American Airlines stock dives on missed earnings and cash burn rate. I want to show you something that there was another story that showed that these airlines are losing a ton of money every month. A ton of money, a ton, not just a little bit, A ton of money every month. So I'm sure that the airlines are looking for the states to start lifting the stay-at-home orders. They really, really are. Now, what else is going on in here? Here's how much, this is the one. Here's how much cash Norwegian Cruise is burning a month. I don't want to do that. How about they're losing 110 to 150 million in cash a month? Holy smokes, that's a ton of money. Now I'm going to have to sing this. The Love Boat soon we'll be making another run. I had to sing that. I just had to. But anyway, these companies, these resorts, I'm sure that Hilton and Marriott all are feeling the effect. The airlines are feeling the effects. The shipping is feeling the effects. Ah, man, it is tough. And the two clickers I'm going to look at here is the Norwegian, Carnival. I'm also going to look at American Airlines, and I'm going to look at Southwest. You're going to find something very interesting about them, though. All right, as I open them up, you're going to find something very interesting about these stocks. Let's go find, there's Southwest, there's American, there's Carnival, and here's Norwegian. Let's analyze them real quick. Southwest, undervalued, like that. American, undervalued, like that. Carnival, undervalued, like that. Norwegian, undervalued, like that. Remember what our mantra is, to have you in safe, undervalued stocks that are rising in price and in rising market. All of these companies that are in these industries, in these travel industries, are all undervalued. Let's look at their upside potential. Southwest, above 1 on RV, good upside potential. American, higher than 1, good upside potential. Carnival, good upside potential. Norwegian, no, good upside potential. So these companies are not only undervalued, they've got good upside potential. These are stocks that you don't mind holding long term, except for right now. They ain't doing anything. But these are good, strong companies that will go up over time. You ever heard the statement, there's a bad time to be in a good stock? These companies are undervalued. They've got good upside potential. Let's look at safety. Southwest, safe stock. That's the only one out of the 4 that is considered a safe stock. American, below 1 on relative safety. Carnival, below 1 on relative safety. Norwegian, below 1 on relative safety. Well, so the only one in here that does have good safety, not as risky, is Southwest Airlines. Well, we all know that they're all going down, so all of their RTs are below 1, and this recommendations or sells on all of them. Take it a step further. Southwest grows their earnings at a clip of 4%. Notice that all 4 companies I have highlighted grow their earnings at a good, at least in the positive. Because their stocks are getting beaten up, the CIs are horrible because these stocks are susceptible to a long downward move. So let's look at these graphs. Let's talk about that.
Upside potential is the same as RV?
Upside potential is RV. Upside potential is RV. RV looks at a stock's long-term upside potential. Look at Love. Now, as some positivity about the market reopening, about the economy reopening, maybe you start to get ready about these stocks. Love. If I'm going to look at any one of these stocks to jump on board with, let's wait and see if the stock can get above the 20-day exponential moving average. That would be a good early entry. If you want more confirmation, wait for RT to go above 1. But look at that. How about American Airlines did get above and now challenging that level of the 20-day exponential moving average today. So you could be getting in real close to bottoms on these travel stocks. Carnival Cruise above the 20-day. Bad day today. Not terribly bad, but it's been above the 20-day exponential moving average for the last 2 days. I would really love to see RT move higher to go above 1. But if you're a little bit more aggressive like Rich, these may not be some bad trades to take, man. Look at these. These may not be that bad. Norwegian also going above. So, Rich, if nothing else, I might have turned you on to some trades to take a look at, being the aggressive individual you are. All right, any questions?
Why Love stop higher than price?
Why is Love's price stop price higher than price? All of these stop prices are higher than price because the stop price is a 13-week moving average adjusted for the fundamentals of the stock. In order for a stock to get a sell recommendation, only one thing needs to happen. The stock's price has to go below the stop price. As a matter of fact, I'm going to do this. We'll move this over. Makes it a little easier. Anytime a stock's price goes below the stop price, the stock automatically becomes a sell. All right, good question. Any other questions, Joey?
Is it too late to buy put options on the travel?
Ooh, yes. So the question is it too late to buy put options on the travels? Yeah, these stocks have been sell recommendations, number one. RTs are so low on them. The move has already happened. I am not going to tell you. I think that there's more upside potential than downside risk. All right, so I probably would not buy puts on these. It's too late. The stocks have already moved.
Can you export a watch list to Excel?
Can you export a watch list to Excel? No, you can import, but you can't export. So I can import symbols right here where it says that. I can import symbols to a file. I don't believe I can export. I've never tried it. I don't think I can. I don't think I can export to a file. Any other questions, Joey? Joey is looking.
What VV indicators can we use for divergence with price to fade the market's move?
What VV indicators can we use? What's that again?
Yeah, let me pull it for you.
Let me read that. What VV indicators we can use for divergence with price to fade the market's move? How about if I go to a market timing graph? A good way of seeing a divergence is looking at indicators. Well, right now, like what happened back here for the pandemic, we saw the market price moving up, but we saw our indicators moving down. That was a bearish divergence. I'm not going to have a bullish divergence now because the market's already moving higher. That's the only way I can answer that question. That's the only way I can answer that question. I don't have anything right now for it. All right. How did you get everyone out on March 23rd? All right. It was February 23rd. Let me zoom in here. This is going to be a story. Let's do this real quick. Let's go to the viewers. Oh, you don't have viewers. Do you have viewers?
Yeah, it's on the other one, I think, right?
Oh, that's the stories. Let's go. Views. There we go. So real quick, let me go back. This is a good question, especially if you're not a subscriber. February. Let's go start with February 24th. In our nightly newsletter, prudent investors should not buy stocks at this time. Aggressive investors and traders should play the market with a bias to the downside. Also, what happened on February 21st, primary wave went down. Buy to sell ratio went from above 1 to below 1. MTI went from, this is the underlying trend in the market, went from above 1 to below 1. Everything was lining up. Let's take this up one day at a time, going to the 25th. All right, we got us out of February 25th. Prudent investors should not buy stocks at this time. Aggressive investors and traders should play the market to the downside. Look at all of the red popping up in our color guard prior to that time. Let's take this up one more day to the 26th. There we go, 26, more red, primary wave down. Prudent investors should not buy stocks. So there we go. That was a good question, but in our reviews, we were getting our customers out at the right time. How can I move the VV watch list I've made on my phone to my VV laptop? From the app, once you've created a watch list in the app, it should show up in your desktop watch lists. All right, I got a couple of other stories. Good question about, especially if you're new to the software. When I sit back and say we got our customers back out in late February, I ain't just whistling Dixie. As I told you, if you take a trial, you get access to these nightly newsletters. Every day we put up what's going on to help our subscribers. All right, let's go to my next story. One other story. I'm only going to do one other story. I'm going to do my earnings story. Companies hitting earnings. Microsoft, stock rises after the company reports a 15% jump in sales and says coronavirus had minimal impact on revenue. Why? Microsoft is a software. What are people doing? Working from home. All right, so you know what I'm thinking? A lot of people who didn't have Office went and bought Office, Office 365, bought all of that stuff. I think because they were home and they needed it. Think about that. What other companies hit? Kellogg's. Pringles maker Kellogg says profits jumps 23% on virus-led stockpiling. Well, if you were going to be home, what is one of the things that you, especially if you got the kids at home, what are you buying? What do you buy for your kids?
Snacks.
No, cereal. Every kid will eat cereal for breakfast, lunch, and dinner. What do you want? Cereal. Right, Joey? Mm-hmm. What do you want for lunch? Cereal. What do you want for dinner? Cereal. And they'll do it. And think about that. That makes sense. Next story, company that made Facebook. Facebook up 6%. Usage tops expectations in Q1. Why? People at home. They're posting all kinds of stories about being at home. Hey, this is what my dog did today. I told you this story about my grandbaby. My grandbaby looks at my belly and says, Papa, do you have a baby in your belly? I'm like, wow. But I posted that on Facebook. You're going to post all of these things on Facebook. What else? 3M. 3M surges on earnings beat. That was nearly 20 years in the making. Man, were they not looking at my stories? Oh, they were? Okay. So 3M beats earnings. One more, Starbucks. Starbucks earnings per share is in line, beats on revenue. All right, so I just wanted to pick up some of the stocks out there that beat earnings. I wanted to be more upbeat. I didn't want to look at the stocks that missed earnings. All right, that's just me. I want to be positive. I wanted to be Mr. Positive today. Woohoo! Yay! I wanted to be Mr. Positive, and I wanted to look at the stocks more so that beat earnings than missed earnings. Let's go to my list. What stocks did I say? Facebook. Thank you. Facebook, Microsoft, Alphabet. Oh, I have that in here as Google. Did I put? Yeah, there's Google. What else? 3M, Starbucks. Kellogg. Am I missing one?
1, 2, 3, 4, 5.
I'm missing M&M. There it is. I have 6. Did I have 6? Oh, I put Google. Remember you put Google? All right. So there's my 6 stocks. So all of these beat earnings. Facebook, undervalued. Microsoft, overvalued. Alphabet, way overvalued. Starbucks, overvalued. 3M, fairly valued. Kellogg, overvalued. Let's go look at our indicators. Facebook, good upside potential. Microsoft, good upside potential. Alphabet, good upside potential. Starbucks, good upside potential. 3M, Kellogg, So what's really making Kellogg move? Relative timing, the big uptick in buying of the snacks and cereal. All right, what else is moving? 3M is moving. All of our stocks that beat earnings have RTs above 1. And all of the stocks that beat earnings, look at their relative safeties. Remember I told you that when a stock has got a relative safety above 1, chances are, just like Johnny Mathis, chances are, because I wear this silly grin, that the stock is going to meet or beat earnings. 4 out of the 6 did. 2 of them were below 1 on relative safety, but still beat earnings. All right, Facebook grows their earnings 19%. That's the biggest one. Interesting that Kellogg, the only thing really moving Kellogg is that it beat earnings and that it's moving up because they grow their earnings at a negative rate. Let's right-click, view the stock graph. Let's see if there's anything here we like. Let's go 3-month graph. Facebook, woo! Gap up after earnings, and guess what? I could put earnings on here. Boom, there's the earnings date. All right, earnings, the stock went up, but you know what? I'm getting a lot of profit taking. Earnings was yesterday. Here we go, a little profit taking going on. If I own Facebook, leave it alone. If I don't, I'd wait 12 cents higher than the high. Next one, Microsoft. Earnings yesterday, a little bit of a bearish bullish candle, bearish bullish candle. I wouldn't take it today because it's a closed candle, but still above the 20-day exponential moving average. Google, above the 20-day exponential moving average. Earnings was 2 days ago. Nice pop-up after earnings, but just a little bit of pullback, still above the gap from the earnings date. I'm okay with that. Starbucks, still above the 20-day exponential moving average, but look at the pullback. All right, if it on an end-of-day basis, if you own the stock and it goes below the 20-day, you might want to consider taking half off the table or the trade off the table altogether. Kellogg's Again, RT is what's moving it. Look at the big down day today. RT above 1, but look at the big down day today. And the last stock is 3M. A lot of these stocks, even though they hit their earnings, there's the earnings there. Even though they hit their earnings, they're pulling back. But as long as they're still above the 20-day exponential moving average, they should be fine. All right. Any questions, Joey?
So I think this question came when you were talking about your stories.
Okay.
But can't value go down to price?
So yeah, value can, question is, but can't value go down to price? So that is the reason, no. Normally, in an undervalued stock, and the reason why we want you in undervalued stocks is because price will tend to rise to value. That's why we want you in the undervalued stocks, because we say that the stock is worth this. Most likely, if it's a good value, stock's price should rise to meet value. Could it happen the other way around? Sure, it could. Most times, price rises to value. Most times, price rises to value. That's a good question. Any other questions?
Does VectorVest recommend buying stocks that are overvalued but have over 1s on all other indicators?
All right, so the question is, does VectorVest advocate buying stocks that are overvalued but have RVs over 1? Yes, there's a name for those stocks. They're called glamour stocks. I did a strategy on glamour stocks a couple of years ago, where stocks that were grossly overvalued but with a relative value above 1, I would still say it's okay to buy those stocks. That upside potential means a lot. So a stock like Google that may be way overvalued has good upside potential. So yeah, if a stock is overvalued, that means that people are willing to pay a premium to own the stock. Doesn't make it a bad stock. But if you have an overvalued stock with an RV above 1, that is called a glamour stock. And you may be with a leader and not with you may be part of the leaders and not part of the sheep. Any other questions?
How do you display earnings icon on stock graph?
So how do you display the earnings icon on the graph? Once you view the stock graph, once you pull it up, look down at the bottom, there is an earnings. Take me off for a second. There is an earnings dot or button right down here. Let me click on it first. Right here, you see where it says earnings? When you click on it, it brings the earnings data onto your graph. All right, that's how you get earnings on the graph. It's right here at the bottom. Joey's going to put me back on. That's another good question. Any other questions, Joey?
Yeah. Is there a watch list for upcoming earnings?
Is there a watch list for upcoming earnings? Yes, there sort of kind of is. So watch this. In the Viewers tab, go down to, in the Viewers tab, we have Events Viewer. All right, there's the Events Viewer. Once you click on that, I can look for all of the earnings dates coming up. I'm going to take off the dividend pay dates. I'm going to take off the dividend execution dates. And all my upcoming earnings dates are now right here. Thursday, April 30th. Here's all of the stocks that are coming up for earnings today. Who asked that question? What's the person's name?
I'm not sure.
All right, whoever asked that question, does that answer your question? And I'm looking at all the way from 4/30, 2020 to 7/30. If I scroll down, let's go see what stocks have earnings coming out tomorrow. Man, there's a lot of stocks having earnings today.
Benham Hoss.
All right. There it is. Friday, May 1st. There's all my earnings coming out for Friday. So yes, there is my list of all of the stocks that are coming out for earnings. That's relatively new, by the way. All right. Any other questions, Joey?
How often EPS and GRT get updated?
How often does earnings per share and GRT get updated? Every single day. Our earnings, by the way, is forecasted 12 months out. It is a 12-month forecast of earnings and earnings growth rate, because earnings is part of that calculation, earnings growth rate. It's also forecasted out, but they are both updated every single day. And if you're on real time, they're updated every second. Any other questions, Joey?
Ron Russ wants to know, is it a good idea to follow the Moneymakers portfolio?
Good question. Is it okay to follow the Moneymakers portfolio? Let's go to the Trading Systems viewer. Or maybe, let's go see, do I have Moneymaker in here? And this is a good, if I have it in here, there's Moneymaker. You know what you want to see? If you want, you ask the question if it's okay to trade it. What's it doing over the last month, over the last 3 months, over the last year? What's it doing year to date? So that's a better way of answering your question. All right, that's a better way of answering your question. Use the data from the trading systems viewer to answer your question. We set it up there for you. Moneymaker is one of the trading systems. Do you like it? Here's the equity curve. Match the drawdown so far this year, or 1 year drawdown, 15%. Annualized rate of return, 17%. Year to date, though, it's down. Hopefully that answers your question. All right? Hopefully that answers your question. Folks, don't forget to comment, like, and subscribe, especially for my new people. Especially for my new people. If there's no more questions, I need to get to looking at some stocks. All right, folks. Joey's going to start typing in some stocks. One per person. Joey, make sure there's only one per person. One per person. Joey's going to call them off to me. We're going to do quick fire of some of your stocks. So on your mark, get set, go. Hey, nobody's doing it yet. Zoom. They got to catch up to me.
ZM.
Zoom.
TZA.
TZA.
Jets.
JETS. That's for airlines.
SOXS.
Okay.
Disney. ELD.
EOD?
ELD.
Gotcha. Eldorado. Okay, gotcha.
I'm not sure if this is PI or PL. Maybe PI.
PI. I'll take it.
Amazon. We looked at Dust. AMD. ZBRA.
CBRA.
Z.
Oh my gosh.
Zebra.
Oh my gosh. ZBRA.
ABX.
ABX. We ain't got it.
No.
Okay.
UPS.
Okay.
NAT.
The shipper.
Microsoft.
We looked at that, but okay.
Yeah. Shop. Low. Let's go down here. There's a bunch.
I know it's a bunch going across. That's why I'm putting it in your hands.
This guy is asking about Apache. He asked about it earlier. Apache Oil.
APACHE.
APACHE.
Yeah, it's APA. The symbol is right here.
Okay.
APA. Okay, I got you.
And
one or two more.
Real. REAL.
Okay.
And XLK.
All right.
No
Joey is going to put a link in the room for you. For anyone's ticker symbol that I did not get, click on that link. We will give you a free stock analysis on any stock that you're interested in. All right? Let's go put this on a 3-month graph. Zoom. Zoom has been hot and heavy, right? Since the social distancing. Interesting that Zoom is pulling back a little bit. Not sure why. I don't have an answer as to why Zoom is pulling back. But you know something? Right from the graph, I see that it dropped below the 20-day exponential moving average. RT is dropping hard. But you know something? We never do this. Right from the graph, let's go pull up the news. Let's go see if there's any news on Zoom pulling the stock's price down. Zoom admits it doesn't have 300 million users. Is that what it is? Just because they say they don't have 300 million users, people got pissed off? Nah, phooey. Put that milk in your mush and eat it. Blah. Anyway, that came out 4 hours ago. I don't know why it would make the stock go down that much. That doesn't make any sense. That's very interesting. Zoom clarifies it has 300 million participants, not users. I'm really thinking that that's pretty silly to drop the price because they said, well, we got 300 million users. Well, we got 300 million participants. Anyway, be careful with Zoom if you own it. It was a hot stock, rocking and rolling. Watch it. How cool is it that I can pull up the news on a stock on the fly? I had to try to find out what's happening. So RT is a smart indicator. It's falling hard. All right, let's go to the next stock. Just be careful with it if you own it. TZA, not ready to pull it yet. This is the small cap bear. All right, I only played this on the down day in the market. I only played on the down day. Notice when the market's moving up, what's it doing? It's falling. That makes sense. You only play this on a down day in the market. This is the small cap bear ETF. Today the market's going down, it's going up. That's it in a nutshell. This is a trade, this is not a long-term play. All right, Jets, global jets. I found that out about this about a month ago, that there's an ETF that tracks all the airplanes, all the airlines. And, you know, remember I just talked to you about the airlines getting ready to rock and roll? Maybe jets is another way to take a look at it as well. It is, over the last couple of days, jumped above the 20-day exponential moving average. The RT is not there. So if I'm more aggressive, I can start thinking about playing it. If I play it now, if the ETF falls below the value of the 20-day exponential moving average, you probably want to take it off the table. All right? Here's what happens. Pandemic hits, they all hurt. They all get hurt. They tried to run, and they couldn't get above the 20-day exponential moving average. Right now, today's price action is challenging the 20-day exponential moving average, but it is still currently above it. If you own it, leave it alone. All right, next one. SOX S. This is the short for the semiconductor. It's moving up today, not above the 20, the short side, which means the semiconductors overall, SOXL, should be doing fine if SOXS is going down. Again, another trade. Excuse me, if the market's moving higher, SOXS should be moving lower. And it is overall. Today is a down day, so SOXS should be making money today. This is not a long-term play. All right? Walt Disney. I heard that they're starting to open up their parks, but in order to come into the parks, you're going to have a mask on and all that kind of stuff. I have them as part of the Stream Wars. And right now, it's above the 20-day exponential moving average. But look at overall, what's Disney doing? Moving sideways. All right, RT went above 1, then came back below 1. Be careful with Disney. I'm not telling you to go run out and buy it. All right, right now it's challenging. This is a level of support at 107.68. Body is right there right now. Let's see if that level of support can hold. If it does hold, it goes up. It's got a level of resistance up here. It could have some upside. But right now it's doing more of a sideways move, and RT is matriculating back and forth above and below the value of 1. ELD, Wisdom Tree, fixed income, now sideways. Can't even break above that level of resistance sitting at 30.63. Can't get above that. So no, I'm not ready to touch it. Moving averages only work best when the stock is trending, whether it's trending up or trending down, not moving sideways. So this moving average is kind of useless on a stock moving sideways. So I can use things like a support and resistance to see if it's breaking through resistance or bouncing off support. All right, moving averages don't work well when a stock moves sideways. So I'm not saying it's something you want to be in right now unless it can break above that level of resistance. PI, MP, electric semiconductor, nicely went above that 20-day exponential moving average. Finally, RT confirmed it, pulled back today, still above, RT is still above 1, but still above that 20-day exponential moving average. If I own it, leave it alone. If I don't, let's see if it can go higher than yesterday's high. All right. Amazon, sideways moving stock. That's it in a nutshell. All right. Above the 20-day exponential moving average. If you own it on an end-of-day basis, leave it alone. But right now, the stock is moving sideways. If I'm thinking about getting in, let's wait till it gets above the 3-month high. Love RT. RT is moving higher. I want to see if price can move RT higher enough to break above that level of resistance before I pull the trigger if I don't own it. AMD, it hit earnings. There's earnings. Earnings was a couple of days ago, but for some reason, wasn't enough to move it further up. Look at that, right at the 20-day exponential moving average. If it falls below, you probably want to take that trade off the table. But you think that AMD is a good, strong company in this space. It should have been still rising. It pulled back a little bit. Be wary of that. That's all. This is a good way to never let a loser get away from you. Having something like a 20-day exponential moving average does the body good. Milk does the body good too. But I do like Zebra. It went up to a level of resistance yesterday at 248, pulled back today, but an open candle. It's a bearish candle, but an open candle, which means the price went higher than it's open. It's still closing lower than the previous day's close, which makes it red, but I like the open candle nicely above the 20-day. RT is pulling back a little bit, but still above the value of 1. Would love to see if the stock can take out that 248.52 level of resistance. If you own the stock, leave it alone. If you don't, Let's see if it can break above that level of resistance first. Next stock, UPS. Earnings came out. They didn't like it so tough. Look at the stock. Right on the day of earnings, fell below the 20-day exponential moving average and still falling. All right. I can almost call that a hammer formation if I want to call that an impending downturn. That could be a possible reversal. RT is still above 1. I would wait on UPS. Let's see if it can get out of its own way. Let's get out of this level of resistance right here before you start to jump back on board with it. If you own it, you shouldn't still be owning it. The day of earnings, the stock's price fell below the 20-day exponential moving average. Next stock, the tankers still holding a lot of oil, but actually pulling back. It ran up, hit a level of a high, had a little bit of a shooting star pattern, followed through, still above the 20-day exponential moving average. If you're trying to swing it, leave it alone. Let your stops manage the trade. If I'm not in it, I'm not touching it just quite yet. I need to see more continuation of up move. All right. Excuse me. Let's go to Microsoft. Beat earnings. There's my earnings date. Still moving up. Today is not the day to buy it. It's a closed candle. The price started at 175 today. It's trading at 169. It's lower than the open. So the stock's price is moving down. It's still a green candle because today's close is still higher than yesterday's close. All right. Let's go to Shopify, moving sideways. Another stock that's moving sideways. Nicely above the 20-day exponential moving average, but the stock's price is moving sideways. RT is just moving along. If you're not in it, I probably wouldn't pull the trigger now. If you are in it, leave it alone. Beautifully above the 20-day exponential moving average. Traveling right at the level of that high, which is a 3-month high at 665.74. If you're in it, leave it alone. If you're not, I would wait. Next stock, Lowe's. We just went and bought some stuff from Lowe's not too long ago. My wife wanted to plant a garden, so she bought a whole bunch of stuff. And it's growing up nicely, and, you know, I help her with it. I help her by looking at it and go, oh, that's pretty. So, yeah, I help. But that's about it. Lowe's is above the 20-day. You know what I like about this? A 20-day and a level of support were both in play right here. And look at that. It stayed above that level of support, not breaking below the 20-day. If you own it, leave it alone. If you don't, I would wait until it can break through one of these other 2 levels of resistance first. All right? I'm always a big fan of making sure you're buying into a rising stock. All right? RT is pulling back a little bit, but that's just because the stock is leveling out. Let's go APA, Apache, Petroleum. I like the steady move of this. Not a lot of jaggicity up and down. Again, when the stock is moving sideways, moving averages don't work well when the stock's moving sideways, but I do like the pickup. I like the rise in RT. Even though it's not above 1, I like the rise in RT. The stock is above the 20-day exponential moving average. Today is not a good day, but overall, if you own it, leave it alone. The stock has moved from a sell to a hold. That's a positive thing. So if you own it, leave it alone. This could be one of the stocks within the petroleum industry that could be one of those early movers. All right, but watch it on an end-of-day basis. Make sure it stays above the 20-day exponential moving average. Next one, real, not fake real, but real. Internet commerce, it is above the 20-day, a little bit more stodgy as what it's doing right now. Up day, down day, up day, down day. A little bit more volatility if you want to look at it from that perspective. RT is above the value of 1 nicely. Stock's price is above the level of the 20-day exponential moving average. If you're trying to swing it, the stock has moved from a sell to a hold. That's a positive thing. The stock, just a down day today, a down day the day before yesterday. Just leave it alone. Let the stock breathe. Take a breath. Let the stock breathe. Leave it alone. I'm not going to get into it yet until it can at least get out of this range of where it is and keep moving higher. If it can get higher than yesterday's high, the stock's got a good upside to the level of about 1692. That may not be a bad play. It is above the 20-day though. RT is moving up. Overall, watch the dip on it, but that's because the stock's price went down today. Last stock, XLK, another like SOX, Sector Technology, is moving higher. I like that. Another stock where the moving average and support worked in tandem with each other. It did close below the 20-day exponential moving average here, but it did hold up to a level of support. That would have been a good reason if you were using the 20-day exponential moving average to say, hey, let me give it another day, and it worked out. All right, I do like that the stock went from a sell to a hold to a buy and still moving higher. Love the RT. I'd like to see more volume behind it, though. I'd like to see more volume behind it. All right, that's everybody's stock. I got through. What time is it? Almost 3:30. Man, it's late. And I'm seeing we got a lot of people still here. Listen, I saw Kev in the background. I don't know how many likes I got, but let's get some more likes in here. If you like what you saw here, don't be afraid. Don't be afraid to like us. If you haven't subscribed to the channel yet, don't be afraid to subscribe to the channel. If you like what you see and you keep coming back, why not subscribe to the channel? We're trying to grow our footprint in not Facebook. What is this? YouTube? And man, and we're trying to grow our footprint in Facebook as well. We have Patrick France that does a live stream on Facebook every Thursday at 11 o'clock talking about the mobile app. All right, so in both platforms, we're trying to grow ourselves. I like that. Samuel says, I already subscribed. Excellent. David, I'm not going to look at any more stocks. Why is AMD still rated a buy? It's rated a buy because it meets the criteria to be a buy. 4 things need to be happening for a stock to get a buy. The stock's got to be above the stop price, trending away from the stop price. RT's got to be above 1, and our VST needs to be above 1. Just because the stock is priced. So you know something? This keeps you from being jibber-jabbery. So the stock goes from a sell to a buy, and you say, well, why is it? And please stop asking the same question over and over. Well, I got you. I'm answering the question now. Don't do that. That makes me not want to answer. It's not that I don't see it. I see the questions. I see the questions. All right, but it's still a buy because it meets the criteria of being a buy. Just because it falls doesn't mean that it's got to automatically become a sell. Why? Why? All right, just think about that. This keeps you from, saying being back and forth on the stock. It's a buy because it meets the criteria. The stock is above the stop price. It's trending away from the stop price. The RT is above 1. VST is above 1. As long as it meets all our criteria, it's going to be a buy. That's it in a nutshell. All right? And Mike is right. It is a good sign. Leave it alone. Leave it alone. Stop overthinking. I'm trying to present to you the easy way to make decisions. Let the market come to you. Let the trade come to you. Don't try to outguess the trade. Don't try to outguess the market. Let the trade come to you. All right? All right. Sorry, Will. Will said there's a delay. I'm sorry, Will. I just jumped up. I'm like, I saw the question. I got you. Glenn, thanks for all you give us. Great energy. I'm on VV. There you go. Thank you, Vince. And again, for all of those people who are not subscribed to the channel, please do. Just like it. We're growing. You like what you see here. If you didn't like it, you wouldn't be here, right? If you didn't like it, you wouldn't be here. All right. Hear the man, dang it. Stop, Sergio. Sergio says, leave it alone. Hear the man, dang it. It's all right. All right. So with that, when you going to be back on? Every Thursday at 2, I'm on. Every Thursday at 2, I'm here. All right, so join us, folks. Like our page, subscribe to our page. And you're right, Richard. I'm always going to keep it real. Listen, I may not always say the things you want me to hear, or you want to hear, but I'm always going to say the things that you need to hear. Because why are you here? I'm going to help you to become a better trader. I'm going to help you analyze those stocks to make better decisions. That's what it's all about. I don't want to make it all pretty for you. I want to make it all real for you. All right, I want to make it all real for you. That's what it's all about. So with that, folks. What is he? Joey's putting something up there. VectorVest up. Oh, the summit. Yes, thank you, Joey. Joey's putting the summit up there. Hit the enter. Oh, it's still moving.
Did I spell it right?
I don't know. It probably. There it is. Put that up there. We have a Financial Freedom Summit 3-day online free seminar. I am going to be hosting it for 3 days. You like how I am here? You wait till we get to the summit, baby. I'm going to be like, whoa, wait. It's going to be pumped. It's going to be real. It's going to be crunk, baby. So, May 18th, 19th, and 20th, I am hosting the Financial Freedom Summit. We have presenters from all over the globe. We have presenters from all over the globe. And I will be hosting it for 3 days. I will be hosting it. Thanks, Grandpa Glenn. You're welcome, Brian. You're welcome. All right, so make sure you can register. Go to the website, vectorvest.com/summit. Click on the register bar. Register for it. It's free, folks, for 3 days. Watch it from home. All right? Watch it from home. All right? And there's the link. So Tech Opinion, there it is. Go to that website, www.vectorvest.com/summit. Takes you to this page, and this is where you register. This is where you register. All right? And this is what we're going to cover for all 3 days. All right? There's the full agenda. And hold on. Here's all the people. Man, Steve looks creepy. He's like, huh? What are you looking for? Huh, huh, huh. All right. I will be, where am I? I'm down here somewhere. They put me all the way at the bottom. And he's like, hey, how you doing? And I'm sitting there going happy because I'm so happy. And so here's all of the people that will be there. And again, it's from across the globe, across the globe. Will the summit be recorded? I think we're going to try to record it. I believe I'm going to try to record it. All right, I'm done. I'm done. Please like the page, like all of this stuff, comment, and subscribe to the page. Subscribe to the page. Wow, really, Kev? Don't start, bro. Don't start. Don't even mess with me, Kev. I'm about to put Kev in timeout. With that, folks, adios. Arrivederci. Ciao. Peace. We're out of here.